evergreen December segment of StockCharts TV. We're going to do one called Catching Big Swings Using Phases, Leadership, and Momentum, and I am your host, Mish Schneider. So let's get going. What I'd like to do with you today is go through some of the main points on an evergreen basis, but we're going to use current application in terms of where the charts are right now as an example of what we're going to be looking for as general guides going forward as we get into 2023. So I wrote a book called Plant Your Money Tree, A Guide to Growing Your Wealth. And in that book, I talk a lot about the 6 phases, and I also apply them to the 6 economic modern family members. As you'll see when we get to the stock charts, that we use ACP plugins to help us with our analysis. Also, of course, understanding how to look at the phases and the family members, which are what we're going to focus on, we can get a sense of sector rotation and how to trade that. And then, of course, the difference is very huge about what happens and how you trade when the family is all in alignment or whether they're disparate. And then finally, at the end, we'll do a quick review of the 7th member of the family, and that, of course, is cryptocurrency. So I want to just start by showing you, those of you who don't know who the modern family members are, very quickly. This is a cartoon representation of all of them ringing the stock market bell. So we have Semiconductors, SMH, with her little chip technology there. Prodigal Son, KRE, Regional Banks. Grandpa Russell, IWM, with 2,000 in that actual basket. Granny Retail, XRT, which represents about 70% of the gross domestic product in the U.S. Transportation, IYT. IBB, which is biotechnology, both a secular and non-secular sector of the market. And finally, here is our crypto guy, and we're going to be looking at BTC as the general representation there. So the market phases, there are 6, is like your navigation system. Once you're able to look at where any instrument, not just the economic modern family, is relative to the actual phases, you get a tremendous amount of information. And most people know very much about the bullish and the bearish phases, but we like these in-between phases as well, because these in-between phases really are the key to tell us whether or not we are really declining from a bullish phase, eventually going into a bearish phase, or whether we're just getting some kind of a correction into a warning phase, ultimately getting back into a bullish. And the same thing with a bearish phase. Are we really getting out of a bearish phase into a recuperation or a recovery phase, or is it just some short covering or a dead cat bounce like we saw so often in 2022, and we'll head back into a bearish phase? One thing is for sure, we will see all 6 phases over a period of time. Each phase gives certain opportunities. Doesn't mean the whole market is always in the same phase. And once you really understand what these phases are doing and what they mean, you really are able to adjust not only your trading time frame, like from active to more of a day trade, to more of a mini swing, to more of a swing trade, but you can really also ascertain your risk as a result. Now, with these phases, we actually use 2 moving averages, the 50 and the 200. In my book that I had just mentioned, I used weekly moving averages because this is definitely going to be a situation where if we're going to look for big swings as we go into 2023, the weekly charts might be very helpful for you to see the longer term trend, while the daily charts and the 50 and 200 day moving average are still extremely important, but probably more for a more active approach, maybe anywhere from 1 day to 1 month or 6 weeks type of trend. So you can get a sense from both, but for our purposes today, we'll stick to the weekly chart. So we have a bullish phase, a warning phase, and distribution phase, bearish phase, recuperation, and accumulation. And we use these not only same 2 moving averages, but it's the position of where the moving averages are in relation to one another that is key. That's what determines the phase. And secondly, how strong or how weak that phase is, we determine by the slope of those moving averages, because after all, slope equals momentum. And if you have a negative slope in an overhead 50-week moving average, as we will see in current conditions, and that slope continues to go down, that tells you that whatever that particular phase is actually accelerating, as opposed to if we see a slope going neutral and starting to turn up, as we say, go from a bearish phase into a recuperation phase. That would be a very powerful signal that a bottom is in. So all of this information is really served to help you make these decisions both short term and longer term. This is the weekly charts of the entire modern family, of course, besides Bitcoin. And this is the weekly of XRT, which is Granny Retail, IWM, Grandpa Russell, IBB, Biotechnology, Semiconductors, SMH, Transportation, IYT, and Regional Banks, KRE. And you can certainly see that in this year of 2022, where these charts start, we were clearly in a downtrend. And the 50-week moving average, which broke down in certain instruments at the beginning of 2022 and not so much in others, or in the case of IBB, had already broken down in 2021, that trend has continued at least in a few of these. So what really information you get from these particular charts is right now, if the 50 crosses below the 200 at any time in 2023 and the price is below both moving averages, then we can say that's going to be pretty negative. That will actually turn into a bearish phase. But for now, we are not in a bearish phase. We are actually in a caution or warning phase because we are below the 50-week, we are above the 200-week, we are smack dab in terms of price in the middle, and we're going to take a look at these on stock charts with the momentum indicators. And the question is going to be now, regardless of whether or not this is evergreen or even immediate, in any chart, what would be is A, do we clear the 50? Or B, do we break down under the 200? C, do we finally see a death cross? Or does the momentum here on the slope of the 50 weeks start to neutralize and turn up as the price clears it, putting us back into a bullish phase? And that's just how precarious we are in terms of what we're seeing here in the retail sector, which of course is extremely important because of the consumerism and being such a great factor in the U.S. economy. Now, IWM is a little bit different in that IWM, from a 200-week standpoint, is a little bit weaker in that this had broken down, came back, broke down, came back. And you know, that famous August rally was absolutely perfect, and this is something that you should be looking at for the future. We had cleared back over the 200. We went right up to the 50-week, and remember that idea of slope? It told you that this little rally here on the recuperation phase was going to be short-lived, even if you didn't know so much on this week. Certainly the next week when we started to go lower, and then we closed the week lower from the week before, and then we had that big move down. So as we're seeing here with the where these two moving averages were so wide apart in July of 2022, look how narrow they're becoming, just like we saw here. So that tells me now, again, we're coming to some kind of a intersection where if the market cannot get into a rally and we cannot take out these 50 weeks and we do not see these slopes of these 50 weeks going up, then in essence what we're going to be doing is probably breaking down under that 200 week, and again maybe having that eventuality of putting this into a weekly bear phase. With IBB, it's quite the opposite. We started out in a warning phase, we went into a distribution phase, we went back quickly into a warning phase, then we had the death cross here and we were in a bearish phase for a while until we went back into actually a recuperation phase and now an accumulation phase because the 200 is above the 50. And so right now, this is the outperforming sector in the entire family, which is why as you go into 2023, if it maintains its position as such, if it maintains a position over the 200 week, you might see some opportunity. However, I would note that even though we've popped up over these 200-day week moving averages, we still have a negative slope below in the 50-week, which is saying that we're still not seeing this start to flip up for the potential golden cross, but that would be something to look at. We still have a pretty far distance between the 50-week and the 200-week in the semiconductor. So again, as you're going in, you want to see these weekly moving averages not only stop declining in slope, but for the price to clear. We do have a nice upward slope still in the 200-week in this particular instrument, semiconductors, which is why so many eyes will be on semiconductors in 2023 and what happens with the interest rates. But for right now, all we're showing is the same thing. We broke the 200-week, we cleared through it, we had the nice rally, and so far it's just been a rally into resistance based on this 50-week moving average. Pretty much the same thing with IYT. You can see how nice this 50-week moving average has just been since we really had that breakdown at the end of March into April. And again, all of these, except for IBB, have been in a downtrend. Yet, we're seeing these two moving averages get closer. So this sort of apex, if we ever get there, of these two moving averages will be key. And if they don't get there, that will also be key. And then finally, KRE, which again started out actually in a little bit better shape in the year, broke down, and now has actually, you're seeing declining slope in the 50 weeks, still a huge difference here between the two. But we've been watching this one very carefully because the regional banks represent the savings and the borrowing habits of the regional areas of the U.S. economy, not the big banks. And if this thing comes down to the 200-week and fails, while all these others start to see the pinching of the moving averages and a failure of the 200, then I think the writing is on the wall there. But at the same token, we always have to be open to the fact that, like I said, these slopes start to neutralize, the price goes above, and we actually, before we ever see a death cross, go back into the bullish phase. Either can happen, it doesn't matter. This isn't about prediction. This is about watching the phases in the modern family and then making your move accordingly. So now we're looking at IWM on the StockCharts platform. You can see I've added the leadership and the real motion indicators, two of the plugins that we have on StockCharts that have been extremely helpful this year in keeping us out of danger, number one, and helping us make money, number two. And also really being able to ascertain for us whether any particular rally is being met with a confirmation in momentum or not, whether we're seeing some kind of a divergence in momentum where something is happening to the moving averages in the real motion indicators that hasn't quite happened in price, which we look for that as far as a confirmation. And the leadership indicator that we see right here is really how any particular instrument performing against the benchmark. And you can see that when we had the summer rally, IWM was the leader, the small caps were the leader, which was very encouraging at the time. But since then, even though we had a quick little pop above the benchmark here back in the end of October, as we're ending December, we're actually going quite lower in terms of the benchmark, the SPY. So we looked at the weekly chart before. We can see that it's sitting right on the 200-week. You have a better view here of how the declining slope in the 50-week might in turn come to match the 200-week. But in the meanwhile, we also have some nice bottoms here. So we're not necessarily saying we might see new lows, although we might. More importantly is that if we do break down, even if we go into that death cross, the key will be, of course, what happens here at the lows that we saw both in June and then again in October, if those things hold or not. On the flip side, of course, as we said, if this 50-week moves up, can we get through it? Can the price go above it? Can we start to see some leadership back? And now if we take a look at the ACP indicator here of real motion, we can see that during these rallies here, this had a mean reversion trade right at the lows, which is interesting. That's when it breaks down under the Bollinger Band and comes back through, that being the red dotted lines. We also had gotten above the zero line, but look what happened here. We never got through the 200 or the 50 week. See what I'm talking about here? The 50 week, which is blue, also declined, also had a death cross just as we were selling off in the IWM. So if we look at where this year is ending, we are in a death cross situation already in momentum, which if this is foreshadowing means it could happen here. Or we could start to see this somehow move back up above the 50. That would be the near-term place to get through. And then, of course, whether or not this clears the 50-week moving average. So all this information put together when it's in alignment is very powerful. If we move to XRT, the situation is going to be very similar. We've already talked about the price here, although IWM is a bit weaker, sitting nearer to its 200-week moving average. Momentum now, which was better, although in this rally here, the SPY was definitely outperforming along with the IWM, started to outperform in the consumer area here throughout October, November, now is turning down. And the real motion indicator also had a death cross here. Even though the price rallied a little bit, that doesn't necessarily mean that rally is sustainable. That's the information we get from momentum. Sure, momentum was getting better, but it never got anywhere near to the momentum it was in August, number one. And number two is it certainly hasn't even come close to getting through the 50-week moving average. So this is all what you're going to be looking for, whether it's the beginning of 2023 or in any particular chart you decide to put up here. Now with transportation, same thing. We don't need to review that the two moving averages on the weekly basis are getting closer. Obviously, you can see the mean reversion trade we had here. Here's another death cross, again, as the price was going up. But it wasn't one that we necessarily felt bullish on or thought the bottom was in, because we didn't see anything in terms of momentum to prove to us that it was going to clear these two moving averages. So that's going to be key, is watching how real momentum indicators, will it show a divergence above these moving averages at the same time we take out this resistance on the 50-week, at the same time we see the slope on the 50-week neutralize, at the same time we start to see in the leadership indicators IYT outperform. It doesn't have to be all of them. In terms of sector rotation, I would go with the three I just talked about, with whatever one signals first. Do they signal more down? In which case that leader could be certainly the harbinger for the rest. Or does one of them break out first, and even though the others are lagging, is that a harbinger for the worst might be over? That's why the modern family is so powerful. That's why the phasers are so powerful. And that's why the momentum and leadership indicators give you just those nice two more layers for confirmation. If we move now into SMH, you can see there's relative strength there. This is over the benchmark, right? It's outperforming the SPY. But we also had a death cross here. So again, price is going up, momentum isn't quite matching, can't even get through the 50-week. It testing, so far as I'm talking to you this week in December, the 50-week overhead, but hasn't quite clear. So once again, in terms of using this on an evergreen basis, what you really want to see is maybe it'll be IYT, maybe it'll be semiconductors, but semiconductors would probably have a better chance of the four we just talked about because it's actually outperforming the SPY. But we still want to see momentum go up, and we still want to see the price decidedly clear the 50-week, which means we would need 2 weeks of confirmation. We look for 2 weeks confirmation on anything in a phase change. Now, if we move over to IBB, you're going to see a different picture. This also had a death cross in price, but it's trading above it. This is well outperformed, really, the SPY with ups and downs. Since here, it actually had its mean reversion trade here, so it kind of faked you out a little bit. But we did have a death cross in the moving averages here on momentum. So once again, we have a divergence. We have price showing above the 200-week moving average. We have a declining slope on the underneath 50-week. We have outperformance on the leadership. And we have a death cross here with it clearing the 50-week moving average in terms of momentum, but still not getting quite above the 200 weeks. So besides semiconductors, really IBB is going to be another key, because in the sector rotation, obviously, IBB has already proven itself, but it still has a way to go. When you have a nice match between leadership, momentum, and price and phase, then not only can you trade the particular ETF, but you can also say that in sector rotation, this is the outperforming Modern Family member. But you can also keep your eye on a potential failure of the others, because as you know, when gravity takes over, everything fails. And the last one before we go to the crypto is this regional banks. As I said, I was very concerned about this. This is that is not the right symbol. And the last one here that we're going to take a look at is KRE, the regional banks one. So again, you can see where that 57 is very clear here. It's the 200-week moving average, but look how negative this has become against the benchmark. And again, we had a golden cross here in the 50-week, which is why for a minute there we were very optimistic that KRE could actually start taking leadership. But look what happened. Two things, and this is why this is so important for you to be looking at these over and over as we get into next year. Again, with these instruments or any instrument, is it never cleared the 50-week moving average here. It's now breaking down under the 200. But more importantly, even though it didn't clear here, it didn't clear here on the 50-week moving average. And even when we had that nice rally in August, it never closed the week out above the 50-week moving average. So it's almost so clean that if you look at anything and it's this clean, then you're going to know right away that either it's time for you to go all guns long, all guns short, into cash, or try to find the ones that are going counter trending. And finally, let's take a look at Bitcoin. Now, Bitcoin here is, this is also obviously relative to the dollar here, which is why you have USD. But Bitcoin is not in an actual weekly bearish phase yet, although you can see the price has been in a distribution phase for a while, trading under that 200-week. And you certainly can see that the distance between the 50-week and the 200-week grows narrow, which means it could potentially get into a bearish phase. And also, you're underperforming here against the benchmark. You never really outperformed. You haven't outperformed in this since 2021. And if we move down to the real motion indicator, again, we had a death cross here, so the momentum is in a bear phase. So once again, this could see acceleration to the downside, particularly if we start to see what happens in the Modern Family, one way or another. And number two is it could surprise if it first starts out with a divergence of momentum, and then eventually can start to move up in performance against the benchmark, and again in performance against the two moving averages. So I hope that was helpful to you, summing up really here how to use the phases, the plugins, the Modern Family, and really be able to ascertain what's outperforming in terms of their own family, what's underperforming, what eventually might be the leader, and what eventually might be the drag. I'd like to end with an invitation to go to this link, www.marketgauge.com/Outlook 2023, and sign up for the comprehensive report that I am completing on all the different macro themes that we see emerging, developing, continuing, or discontinuing for the next year, plus all of the opportunities that we see as far as the commodity markets, the Modern Family, and specific stock picks. And with that, I wish you all very, very happy holiday, happy new year, and I look forward to seeing you in 2023. Thanks so much for watching, and bye for now.